Hello, good morning students. Today we will be discussing basic accounting principles. So first of all we need to understand the types of accounts. So generally there are three types of accounts. Number one is nominal account, number two is real account, and number three is personal account. So the account, we need to understand the golden accounting rules. So what golden accounting rule says? Let us begin and let's try to understand it and grasp it. So first rule is debit what comes in and credit what goes out. Second rule is debit the receiver and credit the giver. And third rule is debit all expenses and losses and credit all incomes and gains. So these are the three fundamental rules on the basis of which we will have to pass on the journal entries. So now we need to understand the modus operandi, exactly the business operating cycle of any organization to understand how businesses are operating into the market. So operating cycle of a manufacturing organization is exactly starts from availing the cash, and that cash can be availed from your own pocket, that means the pocket of the company itself, or it can be availed from some lender, it can be some banker, right? So once the funds is being availed, that fund you will deploy it for buying raw materials. And once the raw material comes to the godown of the factory or the factory premises itself, it cannot remain idle, right? So we need to use that raw material. So how that raw material will be used? That raw material will go into the processing, right? So if I just quote an example of a manufacturing company or a car making company especially, you can better understand a car cannot be manufactured within a single day. So once the process has been started, so that thing will be in process. So at the end of the day, that will be in work in process. And similar is the process at the end of the year, that remains, some work in progress remains, right? So first stage is to avail the raw material from the market by giving the money to the suppliers, and that raw material is being converted into work in progress. And that work in progress, the basic purpose is to just convert it into finished goods. So that is converted into finished goods. And once it is being converted into finished goods, the main target starts, like selling it into the market. And selling happens in two ways. Number one is cash sales and number two is credit sales. If cash sales is being made, then automatically cash is into the chest of the company. So process is being over and the operating cycle will keeps on rotating. But there will be credit sales also. And once there will be credit sales, automatically debtors will arise. So here the credit period will have to be extended by the company to the debtors, and that credit period can extend from 30 days for example to 60 days, or even it can go longer. So the debtors will have to pay back that money within the stipulated time frame. It has been decided mutually by both of them. So ultimately debtors will pay the money, and that money will again rotate. So this entire cycle is called the operating cycle for a manufacturing organization. So this is extremely important. So this is the lecture has been finished for the day. So thank you so much.